comprehensive analysis of the S&P 500 Index, SPX, for long-term investment strategies. Weekly overview. Previously, we noted the potential implications of a Republican victory in the upcoming presidential election. This consideration was top of mind as we evaluated market trends. Recent performance. After reporting a 4.66% gain 2 weeks ago, the S&P 500 strategy experienced a slight pullback last week, only to rebound with a 1.68% increase this week. The conservative S&P 500 strategy is specifically crafted to shield investors from bear markets, allowing for short-term fluctuations without prompting sell-offs. In contrast, our more aggressive report delves into short-term indicators. This conservative approach relies on long-term chart analysis and remains unaffected by emotional reactions or news events, focusing on enduring market trends without attempting to time every minor fluctuation. Current market position. We maintain a bullish stance in the RIDEX S&P 500 Nova Fund, RYNVX, or similar S&P 500 index funds or ETFs like SPY. Economic and political context. Last week's market decline was attributed to strong economic reports sparking concerns over fewer rate cuts. During a recent event, Fed Chair Jerome Powell highlighted the robust U.S. economic growth, which allows for careful deliberation on interest rate decisions. He emphasized the strength of the U.S. economy, the resilience of the labor market, and inflation nearing the 2% target. Political tensions have escalated with President Biden authorizing Ukraine to deploy U.S.-supplied missiles into Russia. U.S. Defense Secretary Lloyd Austin confirmed the provision of anti-personnel landmines to Ukraine. This unexpected development raises questions about potential escalations in the conflict, which could have broader financial market implications. Market outlook. Morgan Stanley has adopted a bullish outlook on U.S. stocks, projecting the S&P 500 index could reach 7,400. Their revised ratings suggest a target of 6,500 by the end of 2025, up from a previous estimate of 5,400. The current base target surpasses their earlier bullish scenario. Another Wall Street firm has also elevated its SPX target, anticipating continued bull market conditions through at least the end of 2025. Economic indicators have reinforced a strong labor market, with a decrease in unemployment claims, and have supported projections of further market advances. The NAB/Wells Fargo Housing Market Index rose to its highest level in 7 months, driven by expectations of relaxed regulations and increased construction under Republican governance. Conclusion. The current strategy maintains a bullish perspective on the SPX. Aggressive investors are advised to consider positions in the RIDEX Nova S&P 500 Fund RYNVX, or comparable bullish S&P 500 index funds or ETFs like SPY. The market's trajectory appears to be supported by favorable economic conditions and policy expectations.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.